Welcome to the Contributors Corner. I'm here with my trusted partner, Michael Succurro from Spark Financial, where we take a deep dive into topics that could impact your portfolios and topics that bridge a gap between unknown sectors. Michael, this is a great topic we're covering today. I mean, they're all great. I mean, let's be honest. But today, given the shift in administration south of the border and the uncertainty of the administration north of the border, there is a lot happening politically.
Yes, there's definitely a lot going on. And the problem is that they have new power. Like you said, they came in south of the border, and we don't know who our new power is yet. The Liberals are still deciding on who's going to come replace Justin Trudeau for hopefully a short term. But again, there's that uncertainty, which leaves us somewhat, defenseless against these new political agendas that are being put in place, and no one to really discuss as to how they're going to move forward with it.
Yeah, I mean, in today's globalized economy, cross-border investments, which we will be talking about today, they play a crucial role in driving growth and diversification. So, these investments involve allocating capital across international borders, and that then allows investors to tap into markets with varying risks and opportunities and even potential returns. So if I understand this, by spreading investments across different countries, different regions, and industries, investors can reduce risk while capitalizing on global economic trends. Yes or no?
Yes, absolutely. You're absolutely correct. They do minimize their risk by, investing across different commodities, different countries, different sectors of the world. The one term we use all the time in the investment world is don't put all your eggs in one basket. And which simply means don't put all your investments into one surefire thing that you think is going to work. Reason being is you want to mitigate your risk. You never know what's going to happen, what new powers come into play. No one has a crystal ball out there, else we'd all be millionaire or billionaires. But that definitely does help reduce your risk, especially when you're looking at your investment portfolio, something as simple as a mutual fund. So instead of going all in on one specific stock, let's pick on the tech sector, especially what happened most recently in the news. You pick one stock like Nvidia and you went all in onto it. If something were to happen that makes it, that forces the stock price down or increases it, you're winning or losing, but it's not a for sure thing. Whereas if you invest in a blue chip mutual fund that diversifies the portfolio within Apple, Amazon, Google, Nvidia, whatever it may be, you're minimizing your risk across the companies that you're invested in. Now you can take it one step further and actually minimize across the globe. And again, the reason you want to do that is for geopolitical uncertainty. Some parts of the world may go into a war. Some parts of the world may hit a harder recession that doesn't affect the entire globe. So you really want to minimize your risk by always diversifying. It's the number one rule I always tell my clients. Even when I have a product that I'm selling to them and they love it, I say, it's great. I'm happy you want to put all your money in here, but I absolutely do not recommend it. It's always good to not keep all your eggs in one basket.
Okay, so with so many political uncertainties, there is an added complexity then. So understanding the dynamics of cross-border investments has never been more important for both individual as well as institutional investors looking to maximize their portfolios in an interconnected world. So my question is this: how does one approach cross-border investments in regions with political instability? You touched on it a little bit, and I'm saying we're not going to get away from this anytime soon. So let's dive into that a little bit more. What should we be looking for?
Well, what you want to look at first is simply just the news as to what is going on in the world. There's great research tools you could use just to understand, what news is affecting what parts of the market. Because again, looking at something like, let's use Russia and Ukraine, that's been a big topic for the past 5 years. There's a lot of uncertainty that happens there as a lot of power comes from Ukraine. So a lot of people were looking at energy stocks. And then also we're looking at how it affects China and the Middle East. Are they going to team up with Russia? Are there sanctions? So a lot of those sanctions that came from the US, you would think would have halted a lot of these companies. So I'll give you one example. It was a great article I was reading. McDonald's completely pulled out of Russia. And that's a huge company, one of the largest franchises in the world. So how does that change their stock performance? It's understanding their diversification into where their franchises are based in the US, North America, Europe, and in parts of Asia, and one being in Russia as well. So that has a major impact when it has a war that goes on into these countries, and these geopolitical powers want to show their dominance by pulling out certain franchises or certain products or putting certain sanctions. And that may affect your investment.
Okay, so you touched a little bit about this, but right now, as we know, current investment landscape, political risk significantly influences portfolio decisions. And because of that, investors now are incorporating country risk premiums and hedging strategies to manage potential adverse impacts. So let's just pause right here for a second. Can you clarify what is the hedging strategy?
Yeah, absolutely. So the hedging strategy is just understanding how you could minimize the risk of your entire portfolio, especially when we're talking about these geopolitical situations as the ones that, we're looking at between Canada and the US right now with the 25% tariffs. So the one main strategy I've always been a huge fan of and that we've talked about earlier is diversification. Again, not putting all your eggs in one basket. You want to ensure that if there is tension in these different industries that you're investing in, you want to diversify out. Maybe take some out of the tech market, put some into commodities, put some into the big banks, or diversify across the pond. Look at companies in Europe, in Asia, wherever it may be, that are on an uptrend. Right now, as an example, the EV market's really taking off in China and in different parts of Asia.
Right.
So again, pulling out of these sectors, because one of the sectors that are being talked about with these 25% tariffs is the automotive industry, where Trump's saying that they're not going to be buying any more cars or manufacturing any more cars in Canada. So you look at your big American companies, your GM, your Ford, your Chevy. Maybe it's time to liquidate some shares from those larger companies and look into these other companies that are coming up and coming in Asia, or companies that have been there for many years, like Toyota.
Yeah, I don't know if the tech sector can take any more this week with what just happened with DeepSeek. So,
yeah.
I recently actually read a study indicating that internationally diverse portfolios carry substantial political risk premiums. So this is exposing investors to tail risks. So for instance, a study from Durham University found that hedging against political risks, in fact, enhances international stock portfolio performance more effectively than diversification alone. So what do you think about that?
Well, I think it makes sense. It's the whole, terminology. I have a bunch of them today is like following the herd. So of course, if something happens in North America, again, just using this 25% tariff as that's the big talk of the town, especially in my industry and what we're working on, again, follow the herd. So a lot of these portfolio managers that are experts that have been doing this for many years that we look to for all this research, they're moving a lot of their clients' investments outside of North America into Europe and Asian markets, even Australian markets. So that's simply why I would see it enhancing when there's a lot of geopolitical risk or tension, is given the fact that many hedge fund advisors or many financial advisors are pulling their clients out of equities in North America or wherever the tension may be and diversifying across the world.
So is that what they're doing to mitigate these risks then? Or investors employing, from what I'm reading too, they're also employing various hedging strategies, such as utilizing political risk insurance, such as diversifying across multiple countries, like you said, and sectors, and also employing financial instruments like options and futures to protect against potential losses. Are you seeing an increase in this with any of your clients?
Yeah, so the one increase I'm seeing this in is actually when it comes to our private mortgage sector, which is the MICs and the REITs that we've talked about in past episodes. And these are all asset-based investments, meaning that it's all backed by the real estate market. And what I've been finding is a lot of clients have piqued their interest in that, especially my clients that were always heavily invested in our seg funds, our mutual funds, or the stock options that are looking to liquidate their portfolio there, because it's just the uncertainty has kept them up at night and made them feel very uneasy, where they're like, okay, I know that if I invest in this specific company, yes, the housing market is still, tilting back and forth. Will it drop? Will it increase? Will it drop? Will it increase? But at the end of the day, they're short-term investments that have a great backing when it comes to physical real estate, something you could touch and feel, like as we like to say.
What risk factors are non-negotiable when considering these investments then?
Well, risk factors that are non-negotiable is, I think it comes to the term. You're always looking at time horizon as how long you're going to invest into something. And again, when there's these geopolitical issues that are going on and you're looking to, again, not diversify, maybe go all in on one specific investment strategy, or you want to diversify, it's always really important to understand what your time horizon may be, especially with global uncertainty. Even though it may seem like a sure thing, a great investment, you never know what can happen. Again, no crystal ball. So that's my main factor, always my clients, understanding what their time horizon is. Is it 1 year? Is it 5 years? Is it 10 years? Because that really helps you understand what type of investment you should get into.
Okay, let's look at sectors and regions that are being most affected by political uncertainty right now. Industries like energy, tech that you said, manufacturing, these are sectors that are particularly sensitive to political changes. And that's due to their reliance on policies, on trade agreements, on regulatory frameworks. I mean, if we look at just the energy sector, shifts in trade laws such as the liberalization of oil and gas exports that can reshape global markets. What about the tech industry? We've seen a big hit already earlier this week, and, is that going to be an ongoing thing? I don't know. There is clearly technology-driven barriers. What are you seeing?
Well, especially let's go back to the tech that we were talking about earlier, especially what happened this week with DeepSeek and the AI space. Now, it's inevitable that's going to happen. I was a little shocked reading a lot of these reports where it sort of blindsided everyone, but I look at it like the race to the moon. It was the U.S. versus Russia. It's always going to be U.S. versus another big political power. And absolutely, yeah, Trump comes into play. They have their meetings as to what they want to put into place for AI and make the U.S. the hub. But at the end of the day, all the countries around the world are not going to comply to that. There's always going to be someone that's going to rival whatever technology is out there. And that's simply what happened with DeepSeek coming out of China. I think that was inevitable. It was, again, I can't believe a lot of these companies were caught off guard. I understand, they came in the middle of the night on Sunday night to sort of shock the world. Yeah. But again, that comes down to diversifying. If you're someone that went all in on OpenAI and Microsoft and NVIDIA, that should be a clear lesson to you as, again, why you should diversify and not go all into one specific sector or a couple specific stocks.
Michael, let's actually continue on with the tech example. So with that, there is also a lot of heightened scrutiny on technology transfers and the cybersecurity concerns around those transfers that is leading to tighter regulations on cross-border investments in the tech sector specifically. I mean, this company that came on the scene, they are small. Is their cybersecurity concern there? Is it any different than a larger company? I mean, how do investors navigate through this?
Yeah, absolutely. And the way I could simplify this is actually looking at the food sector really quickly and not about investments, whatever it may be, but looking at the FDA, the regulations. So it takes anywhere from 18 to 25 months for the FDA to approve a product before it gets onto the market. So now going back to cybersecurity, it's really scary with these tech companies because there is no regulatory body that's really in place. Because at the end of the day, the internet is just to the open world, it's the open market. Someone just hits go, a website's live, and no one's really done their audit just yet. And that's the concern that we face every single day. Cybersecurity is becoming a huge factor in every aspect of the world, in every single industry. Whether you are an old school industry or a new school industry, there's cybersecurity threats all the time. Especially with a lot of when it comes to banking and financial records. They're getting hit and attacked every single day because that's the most valuable asset right now, I believe, to a hacker is getting someone's bank record, someone's information, what their taxes are, SIN number, whatever it may be. Identity fraud is through the roof. And the concern is what is this company that you're invested in? Like I said, DeepSeek comes out of nowhere. They've only been around for less than a year. They're a startup and everybody throws their money at it. You look at these cryptocurrencies that everybody's so concerned about because they're like, oh, you don't know who's behind it. I feel that sort of follows suit when it comes to the tech industry. Again, anybody could create these platforms and open it up to the world the very next day. And there's a lot of fraud that goes on. There's these deep fake websites or, trading codes that are changed. That there's a lot of scams that are going on right now. So it's very, very important that you just follow the right cybersecurity policies. And even when you're trading internationally, using proper brokers, even if the fees are a little bit more expensive, same thing I always tell my clients, I'd rather pay higher fees for something that's a trusted source when purchasing and transferring funds versus this new company that's like, hey, yeah, we'll give you the first transactions for free. Mm-hmm. Well, what's the catch? The catch is you're minimizing your risk because you're maximizing your risk because of the fact that they haven't maybe put in all the firewalls and policies and procedures in place just yet, like a Robinhood or a TD Ameritrade or Dominion Securities, whatever it may be, that's been around for many, many years.
Okay, Michael, let's flip and chat to policies then. There is a huge role that policies have in shaping investment decisions. There's trade policies, there's tax regulations, international agreements. They all significantly influence investment decisions, by shaping market accessibility, by shaping cost structures, and really the overall investment climate. So how should investors adapt to cross-border strategies to shifting trade policies and tax regulations? I mean, my example for you would be like the US exiting the World Health Organization.
Yeah, absolutely. One key factor, and it just sounds so basic, but it's forgot about a lot of the times, is simply the currency exchange. That's one key factor you want to look at when investing in these outside markets. I'll give you an example. The Canadian dollar right now is very weak compared to the US dollar.
Is it going to
Uh,
keep going?
we don't know. We don't have anybody in power right now, so maybe it will. And with these tariffs, we don't know what's going to be happening. But I'll give you an example is that, I was looking at a trade for a client and I was just looking at the purchase order was 25 US dollars and it was $17 Canadian to convert over into 25 US dollars. And that's we're talking about dollars right now, not thousands of dollars, hundreds of thousands. That was just for one simple share, because then we're obviously purchased a lot more shares for them. But that's a big contributing factor. That's almost a $10 difference from the Canadian dollar to the US dollar. So that's a large piece and large factor that I feel like people always forget about, because it's like, yeah, you may be investing in something great that's in the US or in Europe or in Great British pounds or in Australian dollars, but you have to look at the currency conversion, because you actually may be losing a lot more on that conversion rate than what you're gaining on the overall in the long term. And then on the flip side, you have to look at the tax implications on the other end when you're selling and bringing that money back into Canada.
Okay, so let's bookend this with some emerging trends and, of course, some takeaways for investors. Some observations are de-risking global supply chains. Companies are now continue to shift manufacturing and operations to regions with greater political stability, I guess more so overseas. How is that outlook for the economy in the Americas?
Well, the outlook for us is, again, it's understanding what's going on with us right now, with Canada versus the US, before looking to these outside markets and understanding what's going to happen the next couple of days leading up to February 1st. That was the deadline we were given on these tariffs. So both countries are holding strong. The US, one of their biggest pieces is the automotive industry, and with Canada, it's our oils and minerals and our natural resources. And yes, like Trump said, the US has trees, but definitely not enough to supply a lot of these manufacturing plants that we have in Canada right now to manufacture these needs. Let's look at the oil refinery. The US uses a very old, outdated oil refinery that's not able to finish the crude oil that we have coming out of Canada. That's why we're such big trading partners when it comes to the oil sector. And it just won't happen at, February 1st. Hey, here's our new oil refinery. You need to find the land. You need to tear it down. You need to build a brand new one. You need to employ people to build this brand new one. And you need to switch over all your policies on that as well, rules and regulations, whatever it may be. So again, it's not something that happens overnight. It's like technology. It's going to take a long time. It's 18 to 24 to who knows how many months out. Given the fact that you look at how long does it take to build a simple bridge. You're telling me you're going to build a brand new oil refinery factory overnight or even within the next 6 months. I think it's very, very unlikely.
Okay, well, there is an increased role of industrial policies as well. So just like you were just saying with the oil rig and the oil refineries. So governments worldwide are now adopting protectionist measures and industrial strategies, such as the U.S. Inflation Reduction Act. I mean, that was put in place in 2022 as a landmark U.S. law aimed at addressing climate change, reducing healthcare costs, and promoting clean energy investments. Now, what are the global implications of this? Well, that's obvious. It's trade tensions. Some provisions, such as Buy American requirements, have caused frictions with allies like the EU, like here in Canada, and now with the looming 25% tariff threats. Is this even a strategy that holds the same strength? I would argue that it is not. How about you?
Yeah, I totally agree with you. I think what's happening with this whole 25% tariff that's looking to come into play is that Canada is now understanding that it's more self-sufficient. We don't need to rely on other nations or our big brother down south to assist us. We have a lot of natural resources here and many other resources here to manufacture and produce ourselves. And yes, again, like we talked about with these oil refineries, it might take time to build that up, but maybe this is a good kick in the butt that we needed, for lack of a better term, to say, hey, let's turn on the jets, let's manufacture, let's open up these plants, or let's put this production into sixth gear because we're able to be self-sufficient and maybe become a powerhouse, a self-sustainable powerhouse ourselves, and don't need to look to any other aspects of the world. And yes, there's always going to be trading partners and other aspects that we need from other parts of the world, as everything has not come from Canada. But I think we could definitely level up and add a little bit more to the self-sufficiency when it comes to our trading partners.
Absolutely. I mean, for an investor point of view, if you're looking at Canada, you're looking at all the natural resources, you're looking at, all the agriculture, you're looking at all the things that Canada has right here. And, we sell down to the States. However, we make it right here. And as an investor, that's a huge opportunity. So where there is risk, or where there is opportunity, there is also potential risk. So with industrial policies and everything else, what are some pieces of advice that you are giving investors to watch in 2025 regarding cross-border investments and geopolitics? You touched on a little bit, but let's just do the key notes that our investors can walk away with.
Yeah, absolutely. The first keynote, again, it goes back to understanding the news, understanding what news to listen to and how it affects your different types of investments. Again, looking at any geopolitical wars. Is there any refineries or any oil or minerals that we mine within those regions that could get shut down because of a war that's happening? Or anything with who's coming into power? Again, Trump coming into power added a lot of changes to the tariffs that are being put in place, and him wanting to tighten up the borders. So you're able to sort of foresee that and sort of get a look into the future as to what your stocks are going to look like. We'll go back 4 years as an example with Biden. He came in and he stopped the oil pipeline. Yep. And that was a policy he was talking about throughout his entire campaign. And he was voted in back in November. You had all the way up until January when he was going to get sworn in to understand that that was coming into play. So it's, again, understanding the right news and sort of forward thinking as to what's going to happen, especially with these new leaders that come into play every 4 years, 8 years, whatever it may be. And the second piece of advice I have is diversification. Not all your eggs in one basket. Because again, you always want to minimize your risk, no matter the market. Whether the market is a bull market or a bear market, you always should look to minimize your risk and diversify your portfolio.
Well, another great conversation, Michael. That wraps up this episode of Contributors Corner, where we explored the fascinating and complex world of cross-border investments in a politically uncertain climate. A huge thank you to my partner, Michael Succurro, for shedding light on the strategies, the sectors, and policies shaping investment decisions in 2025. From managing political risk to leveraging emerging trends like de-risking supply chains and navigating industrial policies, today's conversation offered invaluable insights for both seasoned investors and those just stepping into international markets. As always, the key takeaway is staying informed, adaptable, and proactive in a world where geopolitical shifts are rewriting the rules. Please remember that only you know your risk level. These are the opinions and insights of our own, and you should always talk with your broker for further information. Thank you for joining us, and we'll see you next time with more critical topics to help guide your financial decisions.